very warm welcome to everyone. It's a big day and we're glad to see so many of you here for the launch of the annual Brighteye European Edtech Funding Report. A lot of great findings, and if you haven't had a look yet, we'll share the link to the full report in the chat as we move forward. So my name is Hege and I'm head of community at Brighteye Ventures, where I'm looking after support for our portfolio of edtech companies and building relations in the wider ecosystem, as well as communications and events. We're super happy to have some expert views in the conversations this afternoon, and I can't wait to hear more from Marie from iconoClass, Felix from GoStudent, Tom at Citi Bank, Carla from Dealroom, and Brighteye's own Alex Spiro Latsis in a bit, all moderated by Freya from Sifted. But first of all, let's dig into some of the results with Reese, who is head of research at Brighteye. Take it away, Reese.
Thank you, Hege. Hello and welcome to the event. Firstly, it's great to be here and speaking with you today. I'm Reese, Brighteye's head of research, as Hege just said. As some of you might know, Brighteye is the most active edtech-focused fund in Europe, investing in 10 or more new companies every year at seed and Series A. The companies that we work with help people to learn and grow, and our interests span the early years through to lifelong learning and everything in between, and we do have interests in related sectors too. Our team really specializes in helping companies to scale across countries, cultures, languages, and institutional barriers. The focus of this presentation is our 2022 European Edtech Funding Report out today, featuring a number of new elements, including global insights, as well as data on found agendas globally and within the more mature European markets. We'd like to thank the team at Dealroom, and particularly Carla Napoleao, who joins the panel that follows this presentation. Hopefully you've had a brief chance to consider the findings already, but either way, I'm sure it's in your inbox waiting for you to take a look when you do have a chance. So we'll start with an overview of what happened globally in 2021 before focusing the majority of our time on the European landscape. So without further ado, let's dive into some of the data. So starting with global edtech. We observed a 34% increase in global edtech VC funding between 2020 and 2021. The step change in VC funding since 2019 is very clear to see. Funding doubled between 2019 and 2020, and the increase to 2021 means that the same amount of edtech funding has been secured in the past 2 years as in the entire 2014 to 2019 period. Increasing funding is one measure of vibrancy in the ecosystem, and the other major indicator is deal count. Deal count has fluctuated quite considerably since 2014. Interestingly, the total in 2014 of 1,079 deals is higher than the total in 2021, following a peak in deal count in 2019 of 1,414, as you can see on screen. It appears that lower deal count follows higher VC funding totals as the ecosystem matures and proven winners absorb more capital, and we'll revisit this again soon. So we'll now consider the breakdown in funding by region. EdTech VC funding to companies based in the US in 2021 has jumped to 46% of the global funding total from 22% in 2020. This represents a significant shift in the dominant region by VC funding. In 2020, China saw 54% of global EdTech VC, but only saw 9% in 2021. As most of us know, political factors contributed to the stall in EdTech investment in China, highlighting broader regulatory risks in the Chinese tech sector, and a stalling Chinese EdTech sector, combined with a booming European market, saw EdTech VC funding in Europe exceed the level in China for the first time. A great landmark, though obviously slightly less significant given the situation, but still 27% of the amount being invested in the US, suggesting that there's lots of room for growth in Europe, which is obviously a very clear positive for most people tuning in today. This said, that the trend of diversifying funding across global regions appears here to stay, evidenced by the leap in funding seen in India and increasing the Advanced EdTech Hub, which secured $4 billion in VC investments in 2021. And of course, the rest of the world are doing quite well as well, with Australia seeing the minting of its first EdTech unicorn in Go1. Now let's take a look at the largest of these pre-exit deals. As of early January 2022, There were 32 pre-exit edtech unicorns around the world that have collectively raised more than 27 billion in funding. The list of 32 companies does not include companies like Udemy, which of course IPO'd in October, and Duolingo, which IPO'd in July. There have been 64 edtech unicorns in total, the first of which was minted in 2014, and 23 of these edtech companies became unicorns in 2021. The most common areas in which edtech unicorns appear to be minted include corporate learning with BetterUp and GoOne, tutoring with GoStudent and Vedantu, and upskilling if you include Masterclass and Degreed. We're also seeing companies selling into schools like New Zealand and universities, including Handshake, also reaching unicorn status. So there's also increasing diversity in those home markets, as we referenced before, with GoStudent being based in Austria and GoOne, as we mentioned, in Australia. And moving now on to the biggest exits. While prominent high-value edtech exits were historically few and far between, 2021 saw a plethora of exit possibilities available to companies at a range of development stages, including private equity acquisitions, industry acquisitions, acquisitions by other edtech companies, and of course the IPOs that we've just briefly mentioned. The most common route of exit appears to be via acquisition by a direct or indirect competitor, looking to either consolidate the position at the top of the chain or to expand their offer to a new or related vertical or geographic market. For example, Baiju's acquisition of Epic serves to both consolidate its position in the US and provides a platform that's complementary to significant parts of its operations. And now we'll move on to the spotlight on Europe. As Brighteye reported throughout 2021, European EdTech VC investment was on course from early in the year to more than double, having first passed the $1 billion mark in a calendar year in July. European EdTech VC continued to accelerate through the end of the year, reaching 2.5 billion in December 2021. The growth in VC investment between 2020 and 2021 has been nothing short of explosive. It took a year for the shocks of the pandemic to reverberate through to VC investment in the region, as understanding of new verticals, early leaders, and possible returns crystallized. The number of edtech deals in Europe follows a similar trend to the global figures, having risen steadily between 2014 and 17, before a steady fall between then and 2020, but the number rose again to 299 in 2021. This is positive, but growth in deal count has not been explosive in the same way as total VC funding. It represents the steady and hopefully sustained expansion of the sector in Europe, likely due to the fact that data does not reflect the earliest rounds of pre-seed, likely formed of angel investors, accelerators, and incubators. And as a slight aside, a relevant aside, average deal size has risen steadily and leapt from 2.9 million in 2020 to 8.4 million in 2021. And who is making these deals in the space? Well, while generally the gaps between the number of deals completed by specialists and generalists has maintained, the number of deals completed by generalist funds with an interest in EdTech has increased. For example, SoftBank, Global Founders Capital, and Vashina Capital featuring in this chart. Most EdTech specialists like Brighteye tend to focus on the earlier stages like pre-seed, seed, and Series A, while these generalists tend to focus on the later stages. So crudely explaining perhaps involvement in fewer but larger deals. We were delighted, of course, to see that we were the most active fund in European EdTech for a second year. The expansion of the European market within the global context is quite significant. Since 2019, the portion of global EdTech deals done in Europe has risen 10% from 21% in 2019 to 31% in 2021, even as the pie itself has got bigger. This highlights the increasing health of the European ecosystem across all round sizes and sub-industries, as well as investors' growing realization that enormously successful companies can be spawned in the region. And in perhaps the clearest indication of the European ecosystem's growing maturity, while the number of deals has been increasing, there are a growing portion of high-value deals being struck as companies both raise larger early rounds and move through funding rounds as they progress. For example, 70% of deals in 2017 were of less than 1 million, but this has now shrunk to 40% in 2021. And we see obviously increasing portions of deals being done in the higher funding categories. Before 2021, only 2 markets had exceeded $100 million in EdTech VC investment in a single year, which was the UK and France. But in 2021, this became 6. As it says on screen, VC funding in European EdTech is spreading across the continent. The EdTech ecosystem is no longer a small pond, getting deeper, with the UK and France dominating the top 2 places, but a large expanding lake with funding heading to a broader set of markets. This said, the UK aside, exceeding 100 million in investment was driven by 1 or 2 larger deals exceeding $50 million. For instance, 275 million of Austria's EdTech VC investment was secured by GoStudent. Similarly, in Denmark, 115 of 144 million went to 2 companies in Illumi and Labster. And this, of course, skews the average deal size in these markets. Totals aside, the UK dominated by deal count with 87 of Europe's 299 deals, representing 24%. This is approximately 2.5x the deal count of any other European market, most notably France and Germany, seeing 29 and 35 deals respectively. And in 2020, 2 deals exceeded 50 million, and in 2021, 11 rounds exceeded 50 million. GoStudent's Series C of 244 million is more than triple the largest round in 2020, which was Brainley's £81 million raise. Again, deals tend to be spread nicely across a range of verticals, suggesting that the ecosystem is maturing with significant players spread across the sector. Turning now to the data on founder gender composition. In the European context, 80% of 2021 EdTech VC investment was secured by male founding teams, compared to 3% for female founding teams and 17% for mixed founding teams. The ratio of funding received by male teams compared to female teams is 27-1, while the ratio of deal count is 6-1. For context, this was slightly more equal than the other regions considered. The global ratio of funding was 31-1, and in North America, it's 36-1. Interestingly, globally, mixed teams are actually raising the very largest rounds. It's also clear in the data that female founding teams appear to be more common in the early stage rounds. And of course, we hope that as female-led teams progress through the rounds, funding will begin on the path to equalizing. The picture is mixed in the UK. So in 2017, 88% of EdTech VC funding to the UK went to male founding teams. And by 2021, this portion had fallen 40% to 48% of total funding. This is positive as it reflects a greater share of capital being raised by mixed and female founding teams. And indeed, in 2021, as you can see on the chart, 49% of funding to UK EdTech companies went to mixed teams. However, the portion of VC funding secured by female founding teams has not risen in the period and has actually fallen, which is obviously not the sort of news and not the direction in the chart that you might want to see. And also it's worth noting on the mixed team figures that they're somewhat skewed by Multiverse's $130 million round, which is of course led by a mixed team. The opposite story is true in France, which we cover in the report, in which the portions of funding are diverging, but the share of deals are converging, suggesting a strengthening pipeline of female and mixed only teams, which is hopefully a positive point on which to end. Founder profiles, looking at a range of characteristics, is something we hope to explore in more detail later this year. So I hope that's been a helpful whistle-stop tour of the report. As I mentioned at the start, we've been working closely with the Dealroom team in recent months to develop the EdTech Focus platform. We're really grateful to the team for their compilation of data using this report. So please do take a look at the platform. It's linked on our website, or of course you can go direct. And as for what's next from us, we'll be sharing a best practice how-to guide for companies looking to raise a Series A. And we're expecting to publish that in mid-February, so watch this space. Please do take a look at this full report available on our website and explore our other insights. But for now, thanks for listening. We're really pleased to now hand over to Freya Pratty-Williams from Sifted. So Freya will be moderating the excellent panel that's waiting in the wings. I think you can already see them. So over to you, Freya.
Great, thank you. Yeah, it's a great report. It's really interesting. I think it underscores what an exciting sector is at the moment. I, for one, am finding it really interesting to write about. There's so many rounds coming out. We're doing loads more on it at Sifted because of that. And yeah, we've got a great load of panelists to discuss some of the themes in the report. I think I'll go to each of you to kind of introduce yourselves, if that's okay. Marie, do you want to go first?
Yeah, thank you very much, Freya. Hi, everyone. Nice to meet you. I'm Marie. I'm the CEO and founder of iconoClass. And in 2 words, iconoClass is a new kind of business school that teach only sales jobs. And one of the particularity is that you have to pay the school only when you get a job.
Great. And Felix, do you want to go next?
Hello guys, nice to meet you. I'm one of the co-founders of GoStudent. We are building a global school connecting children in the age of 6 to 19 to world-class teachers, and looking very much forward to the panel discussion.
Cool, thank you. Yeah, it's great to have the founder perspective. And then we've got an investor perspective too. Alex, do you want to introduce yourself?
Hi everyone, thanks for coming today. I'm Alex Latsis. I'm a managing partner at Brighteye Ventures, which I founded with Ben back in 2017. We're the largest edtech VC in Europe. We focus on seed and Series A investments, and we're very excited about the growth of the ecosystem in Europe, and happy to be holding this panel for all of you today.
Thank you. Tom, do you want to intro yourself?
Thank you very much. Yeah, my name is Tom Singlehurst. I'm a managing director at Citi. I work in the equity research department, and I have responsibility for looking at the global education and educational services space. And as I say, feel very privileged to be on this panel. It's absolutely fantastic. Thanks for having me.
Carla, do you want to intro yourself?
Yeah, sure. I'm Carla Napoleao. I am an edtech specialist at Dealroom. We are a global startup and venture capital intelligence platform. At Dealroom, I handle all the research and content related to edtech. Very happy to be here.
Great. Well, yeah, thank you all for being here. It's a great panel. I want to start by hearing from our 2 founders about what it's been like raising funds in the current climate. So Felix, you've just raised 300 million euros. Congratulations. It's really cool. I wondered what that experience taught you about how the landscape is at the moment across Europe.
So to be honest, I mean, when we raised the 300 million euro round, that was already kind of mid of the last quarter, 2021. Since then, we have all observed the market, so there's quite some movement actually in there. So I think starting to raise now can become maybe a bit more difficult, or at least on the multiple, on the valuation side, it might get a bit more challenging than it was maybe half a year ago. Mm-hmm. But overall, especially for later stage rounds, if you can show good traction, so if you can show like good growth rates, if you can show that, if you can show an efficient way of acquiring new customers and building out lifetime value, and if you can also show that you have the right team, there is enough capital in the market, and you can definitely raise like bigger rounds. But you definitely need to have strong KPIs to raise the larger facilities at the moment. Now more than ever, I would say.
Okay. And across your fundraising journey right from the start, what kind of gaps did you perceive, or what were the biggest challenges across that process?
For us, I would say, especially raising as an education company, the biggest challenge was raising our Series A round. We started with that, or we kicked it off mid-2019. We finally raised it then early 2020. But at that time, our business model was only operating in the DACH region, so primarily Germany, Austria. And the business model was scaling very fast, and we had good unit economics, but the skepticism from the investor side that we can actually scale the business model in multiple countries, that was not there yet. So convincing investors that we can also expand an education business across multiple regions that was still to be proven, and that made it very, very difficult for us to raise that round, to also show, because in the more markets you operate, the bigger your addressable market is, and the bigger your addressable market, the better multiples you can get, and the better you can show what potential you have. So that was for sure the hardest part to overcome.
Okay, interesting. I want to come back to scaling across geographies later. But first, Marie, you've also got experience of raising recently. What did that tell you about the general climate across Europe?
Yeah, we raised 3 million this year. And so the first thing I think is to say that EdTech is a very, very hot topic. I mean, we conducted like 50 EdTech funds and general funds, and I think 99% told us on the first meeting, okay, yeah, I want to know iconoClass, I want to know more about the education market. So I think that's a very good point on the first thing. On the challenge that I met during the raise, I saw two things. First thing, if you don't have like a SaaS business or a marketplace business, it can be a little bit hard for the general fund to understand what you are doing exactly, what kind of valuation you can have. So if you are trying to raise your seed or your Series A, I think that you have to simplify to the maximum your business model, so even general fund can understand your business. And I think the two strong points that you have to have, I don't know how to say that, it's a strong vision, because with education, everyone's saying that you can actually change the world. And that's very important to have a very strong vision on 10 year, on 50 year, and scalability. I think that's so important, because with education, imagine if you have like a physical business, it's very hard for investors to understand how you're going to scale. And yeah, that would be my two advice.
Interesting. Yeah, thank you. And then Carla, you get a really nice overview of the funding landscape through working through Dealroom. I wondered what kind of gaps or changes you're perceiving, and especially, I know Reese touched on this in the reports, the geographical spread and perhaps some areas that aren't receiving so much. Do you want to comment on that a bit?
Yeah, of course. So what we're seeing is actually on a global level that the share of capital of rounds, so early stage rounds up to $15 million, have been declining in EdTech over time, with the sharpest decline happening since 2019. But it's worth mentioning that this is not just a unique phenomenon happening in EdTech, but rather a global trend. On the particulars of EdTech itself, like, we have to be aware that it's a very early stage environment that up until recently was not seen as, as excited prior to 2020. So when VC special analysts started to be more interested in the space, they betted on later stage investments that supported more mature companies. So in that sense, they supported companies that perhaps already had a client base, a product market fit as well. So that's why in 2020, we saw huge sums of capital going for rounds above 100 million. At the same time, like I mentioned, we've seen the decline on early stage rounds. Again, it's still geographically, we see differences. For instance, in Europe, we know that early stage still dominates the share of capital, even though also bigger rounds are happening. I think, like Felix and Marie just mentioned, you have to really know how to, make sure that you have the KPIs, the product market fits, and then you'll be appealing to investors. But we definitely see sort of a struggle in early stage environments.
Okay, great, thank you. And just while we're on fundraising, because I think it's an important question, as it was mentioned in the report, I think 80% of funding is going to teams led by male founders. So Marie, I just wondered what your experience of raising within that context was, and perhaps how you think EdTech's doing in comparison to other sectors in terms of like the daily experience of doing that.
Yeah, so first thing, I'm always so surprised about this number because, for example, me as a woman in EdTech, I have the feeling that working in the education give a call to my mother instinct. I always want to, I mean, it's very personal, but I always want to take care of the students, make them grow. So I have the feeling that it's such a woman competence. But maybe I'm wrong, I don't know. And regarding the funding, I think what is rare, unique, lead to a big interest. So in my opinion, being a woman in EdTech and in the tech in the general, it's kind of an unfair advantage because when the funds see like 10 men a day, when they see one woman, and if the woman works, I mean, that's for sure that they will remember you 10 times more than a man. So for me, honestly, it's just the best thing that could happen to me to be a woman.
Okay. I think there could be a positive angle to it. Yeah. Okay. Thank you. Interesting. And then, yeah, let's hear from Alex. I want to hear how the last year has been for you as an investor, and perhaps how much competition you're facing. And also, I'm particularly interested in the increasing involvement of more kind of generalist investors, how that's affecting what you're doing.
Yeah, it's been an extremely exciting year, and obviously we've been very active. We were fortunate to have a first close back in October 2020, so we're able to start investing from Fund 2 really throughout the last sort of 18 or so months, and you know, obviously fortunate to back Marie among many other great entrepreneurs. Definitely the arrival of generalists on the scene has presented challenges, but also opportunities. I think on the challenges side, you know, whereas before Brighteye was definitely the first port of call for generalist VCs evaluating deals, now they've built their own competencies in the space. And so I think that, you know, of course, we still get an enormous amount of deal flow that's shared from generalist funds, but we are likely to miss a couple more deals here and there with internal rounds happening, you know, sort of without our knowledge. And but having said all of that, the general climate is still one of, you know, specialist VCs having a bit of an unfair advantage. Obviously, we've evaluated over 1,500 companies in Europe in this space, and we're continually evaluating more. And so we get to see, given our focus, pockets of opportunity that maybe are not evident yet. And we get to see trends that are developing but are not fully developed yet. And so that allows us to kind of shift our focus to more underserved markets where there are still large opportunities. And for that reason, and I think our specialist focus, we're still a very attractive partner to generalists. So overall, I would say that generalists are very collaborative with us, and work with us and share with us, and we have very good relationships with them. And then on the EdTech side, the EdTech funds tend to be quite collaborative with one another as well, because particularly where you require some expertise to evaluate a deal that maybe generalist funds would not understand and not appreciate the value of, it helps sometimes to work with your peers in the industry and to you know, to work together in order to get through the early stages of fundraising.
Great, yeah, and I want to come back to kind of trends and things you're tracking towards the end. Tom, I thought you would be a good person to ask about the question of, because Europe's doing well, but other regions are also kind of dumping up, as Reese mentioned, India. I wondered if you think the investment going in is going to be enough to keep Europe at pace with other regions, or how that will play out the continent versus other areas.
Yeah, it's a really interesting question, in part because I think for many years education as a sector has been the dog that hasn't barked in terms of sort of potential sort of investment opportunities for public market investors. The reason I think that is because to the extent public equity investors have had any exposure to education, it's typically been to either essentially publishing companies that are sort of in managed decline, or the sort of for-profit college space, which saw a lot of activity and then sort of regulation and a sort of relatively sort of painful long-term underperformance. And so as a consequence of that, I think a lot of, as I say, public equity investors have been quite cautious around the opportunities in education. I think the big thing I would say, though, is I do think that's changing. I mean, as an equity research analyst, relative to the guys you have on the panel, I'm right at the bottom of the funnel in the sense that I'm the absolute last to know when things are happening, because we don't track the sort of the early stage investment as much. But I do think it's fair to say that interest in the space is growing, and one of the big opportunities, I think, in particular in Europe, is that there is a lot of capital. Patient capital that is not only looking for growth and disruption, which are obviously common themes, but they're also there's a lot of ESG sort of thematic capital which is looking for a home in a sector where there is an argument that there is a genuinely positive impact. And to Marie's point, I think education really does fit the bill. So the dog hasn't barked yet. The dog is definitely stirring, and I suppose the exciting thing, hopefully over the coming years, is that Europe can follow the US, and we can start to see some of these exciting companies come to the public markets.
Yeah, I like the dog analogy. It's a good one. And Tom, again, I thought that you might have some good comments on. In the report, it was saying that acquisition is still the most common exit strategy. Do you think that will continue, or where will we go in terms of exits? Yeah,
it's a really good question. I mean, actually, my sort of deep background is as a media analyst, and one of the reasons why education is so fascinating to me is because I sort of feel like I've seen the future. Media for the last 20 years has been all about technological disruption, and in education we have an industry that is globally massive, but actually fairly sort of under disrupted, if that's the right way of putting it. And so, yeah, I think that's going to, the theme of disruption is one that, I mean, it's obviously personally interesting to me, but it's one that I think is massively interesting to investors. And that's one of the reasons why it's an increasing focus.
And I want to get into, because we've got so much to cover, the kind of actually everyday running of an edtech, because I think it's interesting to hear from the founders we have here. Marie, I wanted to ask you, because everyone all the time is talking about the question of talent. I wondered what that's been like for you, and specifically, who do you want to attract in edtech broadly, and how do you think the industry is finding it? Are you finding it as hard as some other industries?
Yeah, first thing, I'm sure in the industry it's kind of hard to recruit because I have a sales bootcamp. So a lot of people they are hired in 1 week after the bootcamp. So it's crazy how the market is dense. And me at iconoClass, we are working hard on the marketing, so on a marketing team. And I would say that a lot of edtech companies are for B2C. And when you are a B2C company, you have to build a strong brand, a massive mainstream communication, and it's very hard because all the Gen Z are super busy on the social media, so it's very hard to just make a difference. So yeah, I would say marketing talent can be hard to recruit, and that's the big challenge.
Okay, and Felix, how have you found it, especially recruiting during an expansion and people across different countries?
I think, especially since when the pandemic started and everything shifted to remote work. I mean, for us as a company, already before the pandemic, we were fully hybrid, so you can work from wherever you want, and you can also do like fully remote if you prefer that. But we have seen definitely an acceleration in hiring, but also increased competition. Just recently, I read a statistic from the fintech company Stripe. I think before the pandemic, they hired 75 or 79% of the people within the Bay Area. And now in the last quarter, they only hired 29% of people within the Bay Area and 70% already outside. So what does that mean? That means also we as GoStudent, if we want to hire, let's say, a performance marketing specialist somewhere, we also compete with many more companies than before. So this competition for getting very specialized talent, it definitely increased. On the other side, I think as an education company, you also have this unfair advantage of being very purpose-driven. And a lot of young people, they like to work for companies that are purpose-driven. And I think you really need to play that card and show them, look, working for an education company, you have this direct impact on your target group. And as a fast-growing company, you can also attract the people who want to work in that environment. So it can also turn out to be very positive for you.
Yeah, that's true. And at the start, you mentioned that one of the biggest challenges for you is scalability across borders, across countries. Could you kind of pinpoint some advice, perhaps for other people about to do that, on some lessons you've learned on how to do that well, or the key challenges and what the answers are?
So the nature of our business is very operational, right? So we rely on sales teams that sell our services to families directly, our B2C tutoring services. So what we do is we hire people within the country in which we expand, and then we run our marketing operations centrally. We start to duplicate our marketing operations in other countries, and then we have the local sales teams, we have the local customer success teams, and we have our local teacher teams that then take over and sell and maintain our services. And this can be at first a bit frightening that you start operations and you start hiring people in another country. But if you have a strong country manager there, if you have a strong leader there that you can trust and that maybe worked in a fast growing environment before, or maybe for some education company or for some similar type of company before, it's definitely, I can only recommend doing it as long as you already have some product market fit.
Yeah, thank you. And then looking to the rest of 2022, I think it will be an even kind of crazier year for the industry than last year, probably, judging on the last few weeks. But I want to know what people are kind of following and tracking across for the next year. So Carla, I wondered what kind of verticals within EdTech you think will be most exciting.
Yeah, we think that upskilling and reskilling is quite exciting sort of segment. We know that this tackles this huge skill gap that we have currently in the workforce. So we know that more than half of talent needs to be reskilled in the next 5 years in order to meet the demand of new digital jobs. So on a corporate learning front, this can be quite interesting, right? So organizations are realizing that in order for them to keep their competitive advantage, they will need to invest in their workforce. So, their employees need to be learning, adapting, and acquiring new skills in order to stay competitive. So that's definitely one of the verticals that I'll definitely be tracking more closely. And there's a lot of different innovations happening from smaller to larger scale. For example, recently I spoke with a founder from Stockful, which is a German company that works closely with corporates in order to create programs in doing the basics of data literacy, data science, and AI. Aside from that, the upskilling and reskilling on the corporate front, I also think that tutoring is very exciting. I mean, of course, we have a GoStudent here, so we'll tell you more about it, but I really do think the work that tutoring companies can do, especially like expanding in Europe, going to be quite powerful, because up until now, tutoring has been sort of silo, and it has been, for sort of depending on your capacity to pay higher amounts, and democratizing this space can be quite beneficial overall for a lot of families and a lot of students. So those two will be the bets I guess I'll make. Yeah.
Great, thank you. And Alex, what are you excited about in the next year? What kind of verticals or
Yeah, I mean, I think I largely agree with Carla, and maybe have a couple of things to add. But just the sort of it's a combination of two things. It's the unbundling of post-secondary and kind of the overlap between training, education, and productivity. And so I think you're going to find many more companies training to fulfill skills gap shortages, right? So for example, there's a company in Turkey that does this in a really interesting way, where they take they canvass the needs of a given corporate, they canvass a large volume of university graduates, and then they basically they skill map and skill match the needs of the corporates to the graduates, train the graduates, and then place them in the corporates in large volumes. That's just one approach, of course, but you know, increasingly we're also seeing needs and skill gaps developing in non-tech industries. You know, for instance, if you look at the UK, there are severe shortages of people like field engineers. If you look across Europe more widely, the hospitality sector is suffering quite a lot from skills shortages. And so the rise of vocational training platforms to address those broader market needs, I think that, you know, the interesting thing is, of course, education technology companies, like all technology companies, have challenges with talent. The irony is, of course, that the education companies are also the solution to the problems with talent. So if we do our jobs properly, then there will be less of a gap between supply and demand in the job market. And so I think that anything that facilitates that is going to really do very well, because there is such a great demand. On the product side, something I'm very excited about, but I haven't seen an enormous amount on, is just the rise of voice as a user interface. I think that actually, you know, around 4.5 billion voice-powered devices are in use today, and that's going to double in the next few years to closer to 8 billion. And so our familiarity with both on-screen voice-enabled devices and also off-screen ones like smart speakers is going to hopefully encourage some entrepreneurs to think about voice as a user interface. And I think that actually voice as a user interface is very well matched to education applications. If you think about reading proficiency and the analysis of reading proficiency, which some startups have already addressed, but equally just having a different way of interacting with software that's more human and more personal, less about touch, less about text inputs, more about a conversation. I think there's an enormous amount of potential there. But again, it's very early stages, and I don't know if we'll see that many companies addressing it right away.
Really interesting. Yeah, I hadn't thought too much about that. That's really interesting. Someone in the chat is asking if you could clarify the name of the Turkish company you mentioned.
I can't actually. Sorry.
That's okay. That's okay. Tom, what about IPOs this year? Where do you think we'll see them? Do you think we'll see them in EdTech? What's your kind of forecast for 2022 in that sense?
Yeah, it's difficult to be precise about these things, especially it's been sort of mentioned, or it's a reference sort of a couple of times. I mean, obviously, it's been a tough start for financial markets. There's a broader rotation away from growth as the market worries about rising interest rates. That said, I think the reality is if a company if an opportunity is super compelling and that growth is super visible, and is also ticking the boxes in terms of impact, I think there will be plenty of demand from financial markets. And I think probably the areas that are likely to get the most traction are the ones where, if I can be sort of slightly blunt about it, you have the most scope to avoid the obvious pitfalls. I mean, a big feature of last year was a change of regulation in China that really caused I mean, fundamental existential problems for a number of companies in that space. And I think one of the features of that, which Reece already brought out in his numbers, that impacts your space, is a sort of shift from east to west. I think there is a shift also from K-12 up into sort of adult, professional, and lifelong learning, which both Carla and Alex sort of alluded to. The areas that I'm particularly excited about actually are language learning, because I think that is an area that, at least from our perspective, appears to be a little bit ahead of the curve in terms of that sort of technology adoption, and is seeing significant benefits as a consequence in terms of growth. And the final area, which is really sort of echoing Carla and Alex again, is enterprise learning. I mean, I work at Citi. Citi has something like 200,000 employees. It's a big company. I've had the privilege of spending a lot of time with our chief learning officer, and I think the real point here is that, to Alex's point, companies like Citi are really beginning to think about how to do sort of human capital management a bit smarter. In the old days, it was fine just to fire people and then hire people in the area that you want to sort of reskill. And the fact is, on both sides of that, it's becoming quite expensive. And so identifying the skills you need is a challenge for these guys. Finding people within your organization that have those skills and then reskilling them is obviously the holy grail. And I think any company that can offer that is going to be tapping a massive growth opportunity. And indeed that is the common theme in the most successful IPOs over the last 12 months. And I suspect it will be one of the big themes for the next 12 months as well.
Yeah, I can see that. Great. And then our founders, I wondered if you had a kind of prediction for 2022, what you think will happen. Marie, do you have? Oh, I think you're muted.
Yeah, I agree with Alex, Carla, and Tom. Honestly, for me, I think I can see four things. First thing, impact. That's for sure that a lot of people on Earth and even on Europe don't have access to very good education, and that's a big problem. So first thing I would say impact, but we have to make money and do impact in the same time, and it's not always that easy. Second thing, I would say virtual classes. Every technology, it can be voice, it can be like, I mean, anything about technology to have big virtual classes that can help remote learning. The COVID opened this opportunity actually. And in education, sometimes you have physical business, and investors can be a little bit cooled down with this kind of business because they cannot imagine the scalability. So that will be great for education, and I think we are in this direction. And I would say bootcamp, that's for sure, for 20 years old people or 40 years old people, and very efficient bootcamp, because right now we are used to learn and do stuff very quickly. So education has to follow the same pattern. And last thing I would say, educational engineering. How can we do to learn faster? Yeah, that's for me, my point.
I want to take some audience questions after. So if anyone has any that they want to write in the chat, please do that. And in the meantime, Felix, what are you predicting for 2022?
Yeah, I think especially given the growth of the education environment last year, I hope it will continue, and it will drive more people to found companies in that exciting space. In terms of general trends, I would take a close look in markets like LATAM. I mean, you have between, I think, 600 and 800 million people living there, fast-growing population, increasing wealth, and the environment for existing education solutions is still at the bare minimum. Same for the African market. I mean, if you look at the age pyramid, it looks exactly the opposite as in Europe. So you have lots of young people. They all look out for interesting solutions. And in Europe, I think we will see also like a probably big trend towards digital toys. I think especially on the kid side, toys that have some kind of connectivity component, that's very interesting, as well as companies that teach you early on the right skills that you need for the workforce.
Great. I'm just looking at our questions. We've got a lot actually. Someone's saying off the back of the discussion about the number of female founders, what can we do to encourage to even out the balance? Perhaps Alex, do you want to talk about the investor perspective on how that can be anything we can do?
I mean, I think as an investor, you can only invest in the companies that you know that are in front of you, and I think that what you have to do is you have to make a conscious effort to sort of encourage you know, better demographic balance, you know, and to try and educate and inform people of the current inequities in order to improve that balance. And that's the starting point. And then, you know, obviously it goes without saying, there's no form of discrimination from us as investors of any kind. We look at the companies first and foremost, and we look at the founders as human beings. And so, you know, I think the best way to improve these rather awful statistics is to just make sure that, you know, the broader community, you know, understands this imbalance and to encourage more female founders to pursue their dreams and to start companies. So I think it is really a job of educating the community. And I think that, you know, examples like Marie, you know, obviously, who we're very, very proud of, you know, who formed such a great company at such a young age, and really is addressing a massive need in sales, you know, with an enormous amount of force, and you know, it's a great way to start kind of encouraging more female founders to start their endeavors.
Mm-hmm. Marie, is there anything you want to? I guess you kind of touched on your experience earlier, but if anything you want to add?
Yeah, maybe just one point I will say, model role. I don't know if it's English or not, but when you see some inspiring women, it's much easier to imagine yourself as they are. So just as female founder, I think we have to go in high school and tell the girl, you go, you can do it. If you have a very cool idea, you can do it as a man. And yeah, I would just say, just go and see the little girls and just give them the power.
Mm-hmm. That's true. Yeah, I agree. We have another question. Someone saying that K-12 edtechs have benefited from hybrid learning and the fact that everything's been remote for a while. How do people think they will adapt or pivot when in-person returns? I don't know who wants to take that. Perhaps Felix, what do you think about how's the return to more in-person opportunities going to change things?
It depends a bit on the solution. Like in our case, we are K-12, but we address the afternoon market. So we don't address the morning market. We are not a alternative for school. We are something that kids use on top of school. In our case, when kids returned to schools in September 2021, it was actually a boom for our business, because it was back to a regular school day, when kids are homeschooled, it's a kind of overwhelming situation often for everyone, and then you don't want to have a private tutor maybe in the afternoon. But overall, I think, I mean, even my grandparents now understand Zoom and they can do a WhatsApp video call. So I think this general kind of awareness of video learning and digital technology, this will stay for 100%.
Yeah, I agree. I think those learnings will stay. Anyone else want to comment on that? that idea of?
Yeah, I mean, I think if I could jump in here, last year, I'm glad we made this prediction, and thanks Felix for helping our prediction come true. But we said that distance learning and after school tools would have an advantage, and I think that that's absolutely right. And obviously Felix is right in the middle of it and sees it himself and is the best qualified to comment on this. But the learning deficiencies that have been caused by the constant disruptions to children's school years throughout the pandemic, hopefully upon a return to a more normal life, we're going to see, I think, more after-school programs being addressed, and obviously we've seen without school being successful as well, addressing more subjects, not just ones that are directly tied to curriculum, but also ones that are tied to other areas of interest, more extracurricular areas of interest. So I think there's quite a lot of room to run there. And I think, obviously just watching GoStudent grow so much, I think there are other areas where, even for adults, sort of after work, online learning is also growing quite a lot. And the interesting thing there is, we're seeing a couple of approaches where you have, sort of direct video instruction, but you also have a combination of, sort of highly produced content, sort of high quality content mixed with video instruction, social learning, and for instance, one of our portfolio companies, USchool, helps people change their careers and does it through a social learning platform. So I think, there's this sense that a lot of people do want to change their careers in the adult learning market. And so sort of after work sort of learning is another really interesting area of growth.
Mm-hmm. Yeah, we're getting a lot of questions, which is great. I just we're also getting close to the end of time, but let's take two more. We have, what role do you expect M&A to play in a global expansion? I guess, Tom, you touched on that earlier, but do you want to expand a bit more?
Yeah, I mean, I think the as I mentioned right at the beginning, I mean, obviously as a form of exit, an IPO is obviously a very public and exciting thing to do, but there are some big established companies with some big gaps in their offering and relevant expertise. So it doesn't surprise me that M&A in the form of sort of vertical integration of for example, enterprise learning tools into a broader suite of human capital market, so human capital management type tools, that feels like a fairly sort of obvious thing to happen. I think the other thing though that is really, really interesting is in areas like professional learning, we're talking about incredibly fragmented industries, and horizontal consolidation, I think, is also potentially a feature of what we will see. I mean, just in the last few weeks, we've had Skillsoft obviously tie up with Code Academy, forge a strategic partnership with Udemy and Good Habits. You can see the link, the puppet master that might be in the back that's organizing that. But I think more broadly, it just underlines this is a very fragmented market. It's a very big market. And yes, as you say, M&A are very much likely to feature.
Great, thank you. I think we have actually come to the end of the hour. So I'm sorry for everyone who didn't get their question answered. It's great to have so many. I'm just sorry we can't get through all of them. Yeah, Hege, shall I hand back to you?
Yes, thank you so much, Freya, and thanks for your excellent moderation of the fantastic panels. Also, thanks to all the panelists, Marie, Carla, Felix, Tom and Alex. It's been great, and also thanks to the Brighteye team for the great work on the report. It sure is exciting times to be in EdTech. And thanks, of course, also to all of you who joined us here today and for loads of great questions. We'll see if we can come back to them as much as we can. And I hope you all enjoyed it. Also hope to see you all soon. Please follow Brighteye on LinkedIn and Twitter and subscribe to our newsletter so that you know all the activities and get all the updates. And enjoy the report and have a nice evening. Thanks, everyone.